The Indian startup ecosystem had a blockbuster year in 2021. It minted 44 unicorns and funding inflows into the sector growing manyfold to $38 billion. Other factors, such as China's regulatory crackdown and the Indian startup getting listed, catapulted the country into the third position in the startup market. This is just behind the United States and China. Yet, Indian venture capital and private equity firms have largely stuck to investing and leading Series A and B rounds. The biggest investors to lead major late-stage funding rounds of over $100 million in 2021 included SoftBank, Tiger Global, Falcon Edge Capital, Accel, and Sequoia Capital. Some of these foreign funds may have invested directly or through their Indian subsidiaries. What could be the reason behind this situation? Investors say that the lack of access to big-ticket checks and large-scale institutional funding from insurance companies, pension funds, and endowments have largely kept Indian investing firms focused on early and growth stage rounds. According to Ashish Sharma, the CEO of Innovent Capital, most domestic investing firms are focused on early stage investments with fund sizes of less than $150 million. These funds are then allocated across 10 or 15 startups. There are only a handful of domestic funds that have large fund sizes to participate in growth stage. Jatin Desai of Inflexer Ventures said that the Indian venture capital and startup ecosystem is still relatively young. Even the domestic venture capital ecosystem is largely less than 10 years old, and there were hardly 5 or 6 funds doing it initially. So is the situation likely to change? Jatin Desai said, "We saw a change when we were raising our second fund. A lot of domestic players are now interested. I think it's only a matter of time before we start seeing higher funding, but I don't think we will match Japan and China's levels so soon." Rahul Khanna, the co-founder and managing partner of Trifecta Capital, stated that in the long term, the scenario should change as there will be more capital formation locally. He is also expecting other investing vehicles like portfolio management services opening up to having exposure in venture capital. Click the link in the description box below for more details.